Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're joined by a special guest, none other than Matt Schultz from America's Bitcoin miner, CleanSpark Incorporated. We've had Matt on the channel previously. He's back by popular demand to answer some of your guys' questions. Before we get into it, please take a second, hit the like button. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you have any questions that were unanswered today, if you're currently holding shares of CleanSpark, and how you think they stack up to some of the other crypto miners in this space. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got a special guest from CleanSpark, none other than Matt Schultz. He's been on the channel before, and we had him back to answer some viewer questions and give us an update on his organization. So Matt, thanks so much for being with us today.
Hey Bryce, thanks for having us back again. It's great to be here. Happy New Year.
Likewise, yeah. And for those of us who maybe missed that initial presentation, Matt, can you give us a quick background on yourself and what CleanSpark's all about?
Yeah, definitely. So my background is in the traditional energy space, and my colleague Zach and I formed a company that was designed to engineer, design, and control distributed energy resource management systems. So you think about Bitcoin as decentralized finance. We kind of look at energy as the ability to decentralize energy and create little pockets of sustainable renewable energy.
Yeah.
So we worked extensively with the military, commercial, industrial complex. And back in 2020, actually, let me put a comma there and back up. In 2018, we designed our first microgrid solution for a Bitcoin mining facility.
Okay.
And it was interesting to us because the energy load being what it is, and how can you add resiliency and also reduce costs while reducing the exposure to greenhouse gas emissions. And so that was a part of the kind of the thought process that was put into our modeling solution and then our controller. So we then had a second opportunity back, just as COVID was kicking off, to provide a solution for a facility in Georgia. And when COVID kicked up, Zach made the statement to myself and the balance of the board that, hey guys, rather than sell a data center, a microgrid solution, what would it look like if we used our expertise in energy management, working behind the grid, demand response, renewable energy management, time of use management, peak shaving, load balancing, all of that? What if we used that and started our own Bitcoin mine and actually acquired our potential customer? So that's what we did. So December 2020, we jumped into space. I think at the time we were, a fraction of an exahash and maybe mining a couple of Bitcoin a week. And, from that point, we really focused on efficiency and growth, the right kind of opportunities, but above all, the right kind of people.
Okay.
And, we now employ about 130 super hardworking people. We own 4 clean campuses throughout Georgia. We have a joint venture project up in Messina, New York. And we produce, I think our last public disclosure, about 23 Bitcoin a day. And for the majority of the fall, we were, top 1, 2, or 3 as far as Bitcoin production, exahash, Bitcoin per exahash per megawatt, et cetera.
For sure. Yeah, I was going to talk about some of that growth because CleanSpark definitely has emerged as one of the highest growth for sure and highest producing companies. And it's interesting, it almost fell into your guys' lap with that background story. I know you mentioned that last time, Matt, and it's a really interesting way to get into the industry. But like you say, it lends itself very well to your team's expertise. I was actually just looking at your investor deck last night and seeing the map of all your operations, and truly are becoming America's Bitcoin miner, I suppose, eh? So with that being said, yeah, December production operational update has come out since our last meeting. So I wanted to talk about that. For those of you who haven't seen it, pretty impressive numbers. Bitcoin production was up 200% year over year. 464 Bitcoin, I believe, in the month of December. So nearly 500 Bitcoin and just over 4,600 for the year. So pretty impressive numbers, especially considering where you came from, Matt, like you just said. Can you talk to us a little bit about December results, your run rate moving into January, and how the team's feeling?
Yeah, absolutely. So December was lower than November. And that was as a result of kind of a polar vortex issue that happened in Georgia.
Yeah.
And it's interesting, and it's probably important to know that um, we're completely vertically integrated. So we own all of our own facilities. The team of people that I have are what makes it happen. And so when we curtail, it's different than somebody else. We're the largest power producer from MEAG in the entire state of Georgia. So when there is an event that requires the reallocation of those energy resources elsewhere, it's a simple phone call, and
Yeah.
we're happy to do it because it's about the sustainability and viability of the grid, and that also enables us to take advantage of those low power costs in the really good times. And so we see it as a partnership, and as a result, they provide us with data days ahead and then hours ahead. And we have a pretty comprehensive modeling solution that we make decisions if and when we choose to curtail.
Yeah.
And we've advanced our operations to the point that I've been in other facilities before, and when it comes time to shut down, you've got literally guys out there with rubber gloves throwing breakers. Taylor Monig, who's our director of mining ops, and his crew,
Okay.
they've really fine tuned everything, and with some aftermarket controls and some tuners, I guess I'll say, we can decrease the efficiency of the miners based on stuff, but we can also curtail with the click of a mouse. So it's a much more efficient operation. So our production numbers were actually down. What I'm excited about for last year is that a year ago right now, Bitcoin was coming off some pretty high highs, and there was a lot of enthusiasm for mining companies that kind of bet the house on going all in on future orders of mining equipment.
Yeah.
And the same team that analyzes these energy processes, we take, Bryce, I'll give you an example. If you Google Henry Hub energy forecasts, you'll find that a lot of the United States has the grid power has ties to natural gas.
Okay.
So you look at that, and it builds a future pricing model for energy for the coming months. So what we did a year ago is we looked, and it's like, okay, cheap energy isn't going to last forever. $70,000 Bitcoin, if you just look at the last 10 years of Bitcoin, it's obviously very, peaks and troughs, right?
Yeah.
So when you add those two factors together, and then you look at simply the hash rate that was being ordered in all the new latest greatest equipment from Bitmain, it becomes cannibalistic in that we're increasing the difficulty at the expense of efficiency for all Bitcoin miners by being kind of cavalier and finding any plug that'll work to plug in equipment. And so we took a different approach. And so I apologize for kind of deviating from your exact question. But what happened in December and our fantastic numbers in November are really a result of decisions we made in December the prior year.
Yeah.
So what we did is we decided to sell Bitcoin to pay for CapEx and to also cover our OpEx expenses, rather than dilute our shareholders at the period of time that buying a new mining rig was maybe priced at $100 a terahash.
Yeah.
Instead, we bought facilities, we bought immersion cooling equipment, we bought transformers and switchgear and power supply units. And then we stood by and just waited for opportunities. And back in May, we set what's still the lowest price ever paid for quantity of S19 XP miners. We bought them from another publicly traded miner that didn't have the money to pay for them once they made the massive deposit multiple quarters before. And we picked up S19 XPs at like $29.50 a terahash, brand new.
Yeah.
And that flexibility has allowed us to grow. We've been very creative about working with the cities that we operate, creating meaningful partnerships. So the cities make money when we buy power. So they want us there, rather than having a petition circulate that it's too noisy or too loud or too dirty or too whatever. We actually support and strengthen the grid. So it's all been part of that process, and we're excited. To say that we went from less than a Bitcoin a day in December 2020 to producing 23 Bitcoin a day right now, and being one of, if not the only major that's completely debt free. I guess mostly debt free. We've got about $500 million in assets on our balance sheet against about $15 million in debt. So we really like where we're positioned, and we're preparing for some continued growth.
For sure. Yeah, a lot of foresight there. And I think that's why CleanSpark has got so many people's attention and really emerged as one of the leaders. Couple follow-up questions on that, Matt. So I know you exited the month at 23 Bitcoin per day. The big winter storms there shut you guys down for part of December. Are you fully back online now? January?
Yeah,
Yeah?
absolutely. So it's interesting. Bradley Audis does all the power analysis for our team.
Okay.
He's a genius. And we get through our operational group Teams meeting or Teams chat updates 6 times a day.
Okay.
And it's per unit, and if and when there will be any curtailment based on a number of factors. It could be weather, it could be power costs, it could be Bitcoin price, it could be global difficulty, but generally it's a combination of all the above. And so it really comes down to, we're not going to mine Bitcoin just to mine Bitcoin. We have an obligation and expectation to deliver a return to our shareholders. So mining at a loss isn't feasible. So we do monitor that very closely. But I'm pleased to say for the entirety of the month of January, I've had 10 texts a day that say no shutdowns, no curtailments. So we're full blast. And important to know, when we acquired Mawson Infrastructure in Sandersville, Georgia, we were somewhat hamstrung there because Mawson had a hosting contract with Celsius.
Okay.
Celsius being in bankruptcy, it became a little bit tenuous to make sure that we honored the commitments to our purchase agreement, but also we didn't want to create exposure for CleanSpark to have to potentially run at a loss. So we, for the first year of that, we included that Mawson would host at our facility for Celsius and simply pay us when they were utilized. Mawson did a great job of moving those miners out into their PA facility. What that basically means is we opened up 30,000 slots in racks for CleanSpark rigs. And so our teams are actively deploying fresh rigs every single day. We've trained up all of our personnel on warranty and repair stuff. So
nice.
We've got labs at all of our facilities. Every one of our campuses has a repair lab on site, and so we have the ability to not have stuff go down and have to wait for batch repairs. Ship them to China and come back.
Yeah.
So we've got a tremendous group of guys, and their focus is uptime. And so what we've done. It's kind of cool, Bryce. We set up, we've almost gamified it. So, at Sandersville, we've got 8 teams of guys, and each one of those teams is competing one against the other for efficiency. And it's all in good fun. I mean, it's a carrot, not a stick. Nobody gets penalized, but everybody's looking for ways to be more efficient. And, silly things you wouldn't think of, like the big woven fiber mats on the door outside of the mining pods, because hey, if you get dust in there, it could get in a fan, it could take out a fan. We've got a downtime on a rig. The way they think, it's all about how do we win together, and the fact that everybody that works for us as part of our team is also a shareholder. We're all pulling the exact same direction. So it really leads to that 99% uptime that we strive for across all of our facilities.
Yeah, I like that a lot. You mentioned the gamification and the healthy competition, I guess, between the groups last time as well. And one of the big metrics I like from you guys is the Bitcoin per exahash efficiency metric. And yeah, you're right. You're far ahead of the other teams there. Now, one question I had, potentially a concern. You talked about the network difficulty. We know the halving event is coming up in 2024. It's getting more and more difficult to mine Bitcoin each and every day. However, as you mentioned, you guys have began selling Bitcoin last year, or I guess 2 years ago now, and I think your balance is sitting somewhere around like 228 right now. So talk to us a little bit about that strategy. I understand paying for OPEX and CAPEX. I like how you're not diluting shareholders, but are you worried that we're going to get to a spot where it's hard to catch up in terms of your reserve as we see that price in Bitcoin start to move?
Yeah, and so I think that's where the disconnect comes with some of the other mining companies, where we've got to focus on HODL balance. Hey, we have X thousand Bitcoin. If you have a couple $100 million in Bitcoin on the balance sheet, and on the opposite side of the balance sheet, you have several $100 million in debt, it really isn't a net gain for your shareholders. So I want to be clear, Bryce, we use equity, and we began to do it back in July. And what we looked at was, share price of the company versus opportunity price for new miners.
Yeah.
And while we could have sold shares back at $14, the net effect of that is we'd have been buying mining rigs at $100 a terahash.
Yeah.
So using equity at $3 or $4, we've basically sold about 36% of the company, but we've grown by 300%. So we look at everything through the lens of, is it accretive? Does it return more in value to the company than the value of the shares that were sold? And does it add to our cash flow within the coming quarter? And so that's kind of the measuring stick.
Got it.
We're exceptionally bullish on Bitcoin. However, we're also, I think, probably more cognizant of the way that a balance sheet is structured, more so than maybe some other operators might be. And so to us, if we can go from 1.5 or 2 Bitcoin a day to 30 Bitcoin a day with a low HODL balance, but also with no debt, as Bitcoin recovers and those margins start to increase, adding to our free cash flow, now we start to taper away from using Bitcoin or equity and start relying more heavily on the free cash flow that's generated, and we create a balance there. So we expect to continue to grow our HODL throughout 2023. That's part of the strategy. I was on a call until 8:30 last night with a major investment bank, and they're presenting us basically lists of companies, both public and private, that are positioned as such that they're looking for some type of M&A activity.
Yeah.
And to be positioned in the way that we are, we're bankable. If I'm an investment bank and I'm looking to maybe add debt or leverage on the balance sheet of a publicly traded company in order to create a combination of companies that make more sense, it doesn't make sense to add gas to a burning house. But, if you're already well-positioned and well-structured, you're efficient, and you've got some redundancy, now there's something to talk about. So we absolutely are aggressively pursuing, and in fact, we had an M&A meeting the other night that went 4 hours long. There are literally a list of a dozen or more opportunities that have been solicited, outbound, inbound to us, of companies that have interest in working together, be it facilities, equipment purchases, or just an overall kind of a combination approach. So nothing in writing yet, nothing that I'm not making any inappropriate public disclosure, but I'm telling you that our strategy has been to position for this exact moment, just as we've done throughout the year, and that is not to grow for the sake of growth, but to acquire meaningfully. And quite frankly, Bryce, we got a little bit of a black eye when we announced our earnings and had our earnings call. We had a call 2 days before earnings from the principals at Lancium, and they said, "Hey guys, we can still deliver you the power in 2023."
Yeah.
So we had a fixed price deal with Lancium. They had made commitments for 200 megawatts and then 300 megawatts. The caveat was they expected us, rather than come in as a hosted client, to come in and support the capex on that investment, which was looking like a couple $100 million for the ultimately approximately the same net price of energy.
Yeah.
So rather than tell our shareholders, "Hey, we're going to maintain guidance, we're just going to have to either find more debt or experience more dilution or sell more Bitcoin," we're going to pull the Band-Aid off, and we're going to be honest and say, this is where we can get to, that we know we can. And if there are opportunities to grow beyond that, and we certainly plan to do it, but we absolutely refuse to grow outside of the CleanSpark way, and that is energy mix, efficiency, and the relationships we have with the community are above and beyond everything else. So we did that. Got beat up a little bit. The stock suffered from a retail perspective, but you look at all of our analysts that cover it, and that was applauded. That growth to grow is really the wrong strategy in today's climate.
For sure. Yeah, that's really good context. Great explanation there, and kind of background on the thinking or logic from the team. And I agree. It's definitely been a tough time for crypto, Bitcoin altogether, with the FTX and all the rest of it. But the miners that come through this, I think, are going to be in an awesome position. And a few that we've talked to on the channel are all talking about M&A activity. So that's great to hear. And that was actually going to be one of my questions. Now, talking about growth, we're in the new year here. I saw somewhere that the plan to exit 2023 is somewhere in the neighborhood of about 16 exahash. I know you guys just crossed that big 6 exahash milestone last month, and congrats to that. Talk to us a little bit about kind of your growth plans over the next 12 months, and is that 16 still kind of the target for year end here?
Yeah, and thank you for asking the question and giving me a chance to talk about it publicly. We feel very confident in that number. You'll note that as we started 2022, we guided to 3.2 exahash by year end.
Yeah.
We then raised that to 5. We hit that early, raised to 5.5, and came out of the year, 6 plus. I think our last disclosures were now in the 6.2, 6.3 range. So we pride ourselves on being disciplined with guidance, not just for the number, but also for the time.
Yeah.
It's easy to say, well, yeah, we said we were going to hit 20. We did. We're just a year late. You can't make a legitimate expectation of an investment given that approach. So I'll give you some examples. When we acquired the facility in Waha, so this, talking about M&A, there aren't a lot of people that have actually walked the walk.
Yeah.
We bought a facility in Washington, Georgia, from a company called Waha Technology. Great run operation. We kept the vast majority of the people, had a ribbon cutting there with the mayor and the city council, working with the local utilities, had state reps from Georgia in. That facility is in a town of 4,000 people.
Okay.
This town's been around since 1790. It's named after the then president of the United States. The courthouse, maybe I told you this last time, where we signed up on our PPA, is the same courthouse that they signed the documents to abolish the Confederacy. So there's tons of history in this little town.
Yeah.
And we have such a great team of guys. And so the whole town consumed 8 megawatts of power. They had the ability to buy more because they were an early investor in MEAG, and that is all that nuclear power in Georgia. But that was going unused, and so other cities had the opportunities to consume it. So by working together with the city, they're able to now buy that power, turn around and sell it to CleanSpark, and make a little margin on every kilowatt hour.
Yeah.
So that adds meaningful revenue to the city's coffers. But beyond that, we then employ people within those towns that make those towns stronger. We have really high paying, really technical jobs, and we're training people up to be colleagues for a career, not just to train somebody for a job. And so our plan for growth is to take a facility like that. There's 36 megawatts of power, which is 4 times the entire load of the city.
Wow.
It enables the city to have that kind of flexibility when they need the curtailment. The power is there. We're adding another 50 megawatts. So there's a substation being constructed on site, be ready Q1,
okay.
Q2 next year. So there's 50 megawatts of more power that we own. Infrastructure, everything's set up. So there's redundancy. It's on the same property, same personnel. We're already, we haven't said it publicly yet, but we're about to talk about the construction and what that looks like. So we're super excited for that. Sandersville, we bought that facility from Mawson Infrastructure Group, 80 megawatts live. And part of the purchase agreement included an option through MEAG to add an additional 150 megawatts. Wow. This is all primarily nuclear-based power. So we're building out the additional 150 megawatt substation there. We have room for expansion at both of our other Georgia facilities of some additional stranded resources that the city or the state has agreed to allocate to us. But beyond that, Bryce, I think that there are opportunities through M&A that we're looking at on a real-time basis that could potentially be kind of game changing, if you will. We're looking for opportunities that share our vision, our passion, but also our focus, and not to get into the virtue signaling side of ESG, but each of those stacks individually, being environmentally responsible is important. It matters, especially in this space.
Yeah.
There's a press release up in Washington that, Washington's going to start to more closely monitor Bitcoin mining emissions. Well, the bill is actually for data centers. So to say data center emissions is kind of boring. So if you add to the headline and say Bitcoin, now all of a sudden it's salacious and it's these terrible Bitcoin people that are raiding and pillaging the planet. So
Yeah.
We think that the optics are important, the relationships with the communities and the utilities, and like I said, most of all the people are important, and that makes a difference. I'm going to steal 30 seconds of time that you didn't ask me a question, but we had a facility go down in Georgia. We had a transformer blow up, and these guys are all competing. And got a kid that works for us in Washington, Georgia. His name's Bucko, and he looks exactly like what you think.
All right.
He's a Washington, Georgia, born and bred kid, and one of the hardest working guys around. And transformer goes bad, and between Bucko and all of the team leads down there, they're calling a friend of a friend with a crane that knows somebody at the utility company. They're swapping out a transformer in the middle of the night because they don't want to lose hash rate to the other teams they're competing against. And it's that kind of spirit and that kind of environment that people are so passionate and care so much about what we do, that's the commitment they're willing to make. And I think what our kind of our model internally this year is about differentiation. What sets us apart from everyone else?
Yeah.
And then relevance. Why does that matter to our investors? And it's things like that we've not done as great of a job. Guys like Dell that run that facility and lead those teams, they're just willing to do whatever it takes. And I really feel like that's something that we need to focus on more as a company. I take a lot of pride in sharing that with the research analysts, but most of that is behind closed doors. And I think it's great for the retail investing public to be aware of that too.
Well, totally. You hit on so much there. Like that corporate culture is a differentiator, and those partnerships. I hear you. A lot of people beat the ESG drum, and it is what it is. But these meaningful partnerships that you're supporting the community, that is what's going to help separate you from the pack. And at the start, you were talking about achieving and hitting deadlines and timelines and stuff like that. And that gives a lot of investor confidence, right? You want management to deliver on what they're saying they're gonna on time. And I think it's that exact corporate culture, Matt, that the people there are in it together and they want to deliver because they're, like you said, they're invested in the company, right? So that's great. And that hits on a couple different questions. I was going to talk about a differentiator, and I was also going to talk about how are you going to get to that 16 exahash. It sounds like a mix of organic growth and potentially some M&A activity coming up on the horizon, hey?
Exactly. I think you and I talked about it last time we met, and that is that we really see three distinct levers in our capital management strategy: equity, debt, and the sale of Bitcoin. And we plan to use some combination of those. It's interesting to note that companies with a solid balance sheet are starting to get solicited for debt again. And I mean real usable debt, not the 60% LTV, 25% interest kind of crap that was out there that people were actually buying, which is now why we're seeing companies surrendering equipment back to the lenders. But real usable bank debt. And so so we have line of sight 150 megawatts of power at Sandersville, 50 megawatts coming online in Washington. There's another 20 plus megawatts at other facilities. And then we've got a number of other opportunities to acquire power that are already on the table, as well as loaded operating facilities, and we'll pay for that. We'll be very transparent with how we pay for it, just like we've always been. Our expectation is that if it's M&A, it's likely to be stock for stock with some kind of a cash assumption of liability if it's manageable. We'll continue to use Bitcoin to the extent that it makes sense. But we've messaged very clearly that we see this as a year we begin to add meaningfully to our HODL. And I think the difference is we've got 20 plus Bitcoin a day of production on debt-free operations. I mean, I've got nearly 70,000 ASICs mining operating every single day. And of that fleet of 70,000 rigs, 3,000 are encumbered. Wow. That's the only debt we have. So, we're positioned really well to kind of grow aggressively and make some decisions that really benefit our shareholders for 23.
Great. Yeah, and that was going to be my last question is what's the plan on the Bitcoin reserve? And 23 Bitcoin a day, it doesn't take long to beef that reserve up. And I too am very bullish on Bitcoin. We've already seen a pretty good move this week. I know a lot of the miners are up big, including CLSK. So that's great, Matt. Thanks so much for your time. We'll be sure to have you back on the channel in a couple months here to talk about any big events or changes at the organization. Before I let you go, where can people find out more information and any closing thoughts for the audience here?
Hey, I appreciate that, and thanks again for having me back. It's always fun to have these chats, and I appreciate your platform, your channel. You do a good job. I watch a lot of what you do, so thanks for the invite to be here. Any thoughts to close? We joked around that as we're looking at growth, maybe expanding our motto to be North America's Bitcoin miner or all of the America's Bitcoin miner. We're strategically looking at some really cool opportunities to maybe expand
Awesome.
Beyond the lower 48, and just really grateful for the support that we've had from our shareholders. The coolest accomplishment, 6.5 exahash or 6.3 exahash and 23 Bitcoin a day. That's all cool. We put out a press release yesterday or the day before. Nobody cared about, but for me, it was a huge badge of honor. And that is, there's a certification process called America's Great Places to Work.
Yeah, top employer.
Yeah, company doesn't pay for that. That's research that's done and feedback that's been given independently. And the fact that the people that get up at 3 a.m. to fix transformers or, show up early and stay late or come in on the weekends to repair data connections or whatever the case may be, the fact that they voted us a great place to work is a huge badge of honor, because that's what that foundation is the basis for every single thing we do. And we look for that culture to be really meaningful as we transition into the coming year.
For sure. Yeah, you're right. Those kind of things don't grab the headlines, but they make everything else possible. And I read it, so somebody out there did read it for you, Matt. Okay, great. Well, thanks so much, guys. Appreciate you joining us today. If you're not subscribed to the channel, McNallie Money, feel free to do so. If you're still watching at this point, make sure you hit the like button. If you have any other questions for Matt or CleanSpark that we didn't get to in today's presentation, feel free to leave them in the comment section below. That's all for today. Thanks for watching, and we'll see you in the next video.